Good afternoon. My name's Dan Rawlings, Director at Lambert Hampton, where we have offices locally here in Fareham and Southampton, with dedicated service lines offering industrial logistics, offices and capital markets consultancy, part of a national network of 28 offices UK-wide. And what I'm going to do today is take you on a bit of a journey over the last 5 years, where we've endured multiple general elections, Brexit, as well as the pandemic, and talk to you specifically about the impact on supply, demand, rental tones, inquiry levels, and general sentiment in the marketplace. So the statistics I'm due to show you, they're sourced externally, collated by us then at LSH, and then distributed quarterly, and can be made available by looking at our webpage, titled the Lambert Smith Hampton Market Pulse. So to summarise briefly on this journey I'm about to take you, we're going to see the impact of supply, how it's dwindling on the south coast, how take-up remains really robust, inquiry levels, land values and rental tones continue to increase. So starting with availability, two graphs here to show you, the one on the left tracking quarterly and the one on the right the annual availability, axis on the bottom denoting the annual or the quarterly take-up and where the stock levels were at the end of such period. Axis on the left is on the millions of square feet available at the time. There's also a 5-year average line you can see dotted across the middle, as well as differentials between prime and secondary stock. And why is it important that we track this? Well, it's when reporting to clients, etc., to promote further development, it's important to know where the sentiment lies, how quickly prime stock, for example, is taken up. And how do we differentiate that? Well, it is fairly subjective, but collectively we agree, particularly based on the age and specification of the buildings. So as we stand here at the end of Q3 2021, supply levels are almost at the levels of 2016. And it's interesting to see where the peak of available property occurred in 2019 to 2020, when the majority of the mid and big box schemes across the whole of the corridor came to fruition. And what you can see now is a tailing off of availability as take-up continues to chew away at the available stock, and there's a bit of a logjam in terms of the deliverability of further supply coming forward. So we stand at just over 2.25 million square feet across the corridor, and that's a decrease of 2.3% on the previous quarter and approximately 26% decrease year on year. Again, really highlighting the issue of further supply coming forward in the pipeline. So for comparison, there were 31 new properties come forward on Q3 compared to 38 properties in the previous quarter, of which there were 24 beneath the 10,000 square foot size sector. And what I'm going to touch upon later is how this details the core bulk of our market and what we describe as the bread and butter across the south coast. Just under 320,000 square foot under offer at the end of Q3 and approximately 46 separate transactions, an average size of just under 7,000 square foot. This is a similar volume to what was under offer at the end of Q2, but crucially, less than half of the amount of square foot remains under offer, and that results in what you can see on the average size property under offer. So this has led to a real imbalance between supply and demand, which is where we're now seeing rental tones and land values increase also, and this is despite the uncertainty surrounding the impact of raw materials in the supply chain and increasing construction costs. So what we've got here are two examples of some new schemes coming forward. The one on the right here, Quest 271 on Tess Lane in Nursling. Fantastic example of former employment space, bespoke office building being recycled into industrial and warehouse use, which is where the general sentiment has taken it toward following a competitive bid process. And what that's delivering is grade A 40, 50 and 60,000 square foot warehouse. And what I'm going to touch upon later is why this is such a sweet spot for development currently. The scheme on the left, Adenac North, during 2020, developers Oceanic Estates brought forward approximately 200,000 square foot across 19 properties, and despite the turbulence suffered during 2020, by the end of the calendar year, so at Christmas 2020, almost all units were under offer or let, which just goes to show the substantial demand that remains in the market even during such a turbulent year, which is why it's fantastic to see the confidence given then for the developers to push forward for a second phase there. And this is going to be in the smaller and multi-let size range, 5,000 to 50,000 square foot across 10 units. And it would be fantastic to see these units being brought forward sooner, but for some of the reasons I touched upon, with the impact on the supply chain and availability of raw materials, as well as increasing costs affecting feasibility, we're seeing particularly a lot of these developments lag behind, which is why they're coming forward in 2022. So looking upon take-up, similarly we track it again on a quarterly and an annual basis. And what we can see is that Q3 generally tends to be a very busy quarter, leading on to typically the higher take-up ends up in Q4, because transactionally we find the majority of deals happen towards the latter end of the year. What we can see at the moment is that this quarter in particular has been the busiest Q3 on record. So approximately 600,000 square foot transacted across 52 properties with an average size of just under 11,500 square foot, really showing where the majority of the deals being in the mid and big box sector have brought that average size up. So that's an 8% increase just over against the previous quarter, and 28% increase year on year. And we expect to achieve at least the 5-year average of 1.8 million square foot by the end of the calendar year, if not surpass that and hit probably the levels achieved in 2016. So 2021 I'd probably describe as the year of mid and big box here on the south coast. During 2020, as a result of the pandemic, we saw swaves of take-up in the Midlands and further up north, predominantly through the e-commerce sector, third-party logistics, last-mile delivery, to name a few. And this has almost filtered down into 2021 now. And so as we stand at the end of Q3, over 850,000 square foot, or approximately 55% of total take-up to date, occurred in only 19 deals of sizes above 20,000 square foot, which goes to show where the sentiment of the market shifted towards that mid and big box sector. And this is why it's fantastic to see further development coming forward in the corridors, such as the Quest 271 scheme there in Nursling, and then further development coming through the planning process at the moment on other sites across the corridor. And in terms of secondary kit, there were 43 transactions, only 8 of which were above 10,000 square foot at an average of 7,700 square foot approximately. Again, going to show the robustness of the secondary market, where the bulk of the smaller transactions occur. So these were probably two of the flagship deals that occurred this year. The one on the right, Dunsbury Park by Portsmouth City Council, was a fantastic achievement in landing by Pure Technology Limited. So where this availability has not been here on the south coast, occupiers are either forced to look further afield, which isn't so good for us in retaining the employment and fiscal outcome in the local economy, but alternatively they look at design and build opportunities. So what opened up here was a design and build opportunity, and they're talking 18-24 months in the pipeline to deliver this company here, which is fantastic considering we brought them further down the A3 and we've retained their employment within the corridor, crucially. And the scheme on the left, South Central, was an Evander Properties build in 2018-2019, 3-unit warehouse scheme. Again, this is at Test Lane and Nursling. 40,000 and 50,000 square foot pre-let or let just after completion to John Lewis and Travis Perkins, or a subsidiary of. And this deal in particular I highlighted because Hermes, whilst there was a bit of a void on this property, the shift in the sentiment of the market meant that there was good demand during 2021, and being able to attract an occupier such as Hermes Parcelnet Services, they moved from a 70,000 square foot building to almost 120,000 square foot building, and I believe created upwards of 100 additional jobs for the local economy. So as I touched upon, this really goes to show the shift in sentiment towards particularly mid and big box properties at the moment, and also the increased competition we're seeing. So everyone I'm sure is aware of the competition you get when disposing of a freehold or a long leasehold property. This year in particular we're witnessing a lot more competition for leasehold properties. So there's been many an instance on it, be it a 5,000, 10,000, 40,000 square foot leasehold opportunity. We've had 2 or more occupiers bidding for that property, which in turn is going to increase the rental tone and decrease incentives. So touching upon rents and inquiries, start with inquiries here. We track them into different size categories, which is the bottom axis. On the left-hand side, volume of inquiries. You can see the average bar, and then the different colours are each individual year. And as I mentioned earlier, you can see the core of the market being that sub 10,000 square foot, where traditionally the bulk of the inquiries come through, but also sweet spots where there were peaks during 2019-2020 in the 30, 50,000 square foot plus sector, where we had that availability of larger mid and big box properties, such as the South Central scheme at the time, Alpha Park in Chandler's Ford, so that, Mount Park Southampton and Velocity in Havant, to name a few. And it'll be interesting to see the results of the Freeport allocation come the new year, when we understand the detail and what sort of uptick this has in inquiry levels across the corridor. So touching upon rental tones, we generally track these in the 20,000 square foot and above category, because there's less fluctuation as there is in the smaller size brackets, but also there's not so much differential between the 20,000, the 30, the 40s and the 50s. What we've got on the bottom is where the headline rent stood at the end of the year, or Q3 in 2021, and on the left-hand side the monetary value, and the differential between the prime Southampton and prime Portsmouth, and also the secondary markets, the 2 key anchors of the corridor where we track these statistics. And what it's interesting to see in particular is the growth. We're probably talking 25-30% over the last 4 to 5 years, as well as the marginalisation between prime and secondary rents. You see that gap getting narrower as we go through time. And crucially, that the pandemic has not slowed rental growth. In fact, there's examples last year where we transacted on 15 to 20,000 square foot, achieving new headline rental tones of £10.25, £10.50 a square foot. And now to date, we're achieving £11 a square foot for similar type properties. And reasons why for this? Well, I think it's a mixture of the lack of supply, demand continuing to be robust. Landlords have been a bit more comfortable in sitting on a void period, because they know there is the lack of supply and the demand remains out there, so they can achieve their headline rents and improve the investment and performance of their portfolio, but also partly due to, I'd say, consumer sentiment shifting during the pandemic, where, as I mentioned earlier, the growth in those certain sectors like the e-commerce and third-party logistics, to name a few, meaning that these companies are needing more space much more quickly than usual. So to finish off and summarise, I suppose 2021 has been quite a star of a year for industrial logistics, and I've never seen so many headlines when I flick through the BBC News in the evening, when we're talking about the lack of warehouses nationally, impact on supply chain, rising construction costs, the lack of HGV drivers or increased shipping costs, and yet, coupled with the pandemic, it's really comforting to see such stability in the region, and not just for the pure volume we see in the take-up and the new product that comes through, but the consistency it does as well, which in turn means that the South Coast remains a leading light and a fantastic opportunity for future investment to boost the employment in the local economy. So if there's time, I'm happy to take any questions. Pleasure. Thank you, mate.
So next up